Okay, hi traders, here's a new video. First of all, the risk warning, your invested capital might be at risk. Don't trade with money you cannot afford to lose, and this video is not investment advice. So this video is another technical analysis candlestick chart online trading video, yes, because we have weekend, you know, OTC market is not available for European traders. So I'm doing this kind of technical analysis video every weekend where I discuss those trades which I have already done, which they are based on those things which I have explained in my ebook. So get this ebook, it's for free, you find the link in the description. This ebook contains the most important candlestick pattern, chart pattern, binary option, turbo trading concepts, market condition, trend identification, rejection, candlestick math, and a lot of more concepts which can be applied to any kind of time frame and any kind of financial instrument. So get this ebook, it's for free, you find the link in the description, and in the description you'll find also the link to the Facebook group. So this video about the technical analysis, yes, and candlestick chart online trading video are based on on the technical analysis and the candlestick chart, yes, analysis and price action. And you see the assets will be opening in 1 day and 15 hours. So let's see if we are going to start to discuss those trades which I have already done more in detail about this kind of technical analysis. So let's see. We have here this kind of video which I have taken, and you see here, let me show you first of all the most particular stuff here. Yes, we have here a nice resistance area. Yes, you see here how price is doing here a pullback. Yes, you see here a nice reversal candle. Yes, and then we got a pullback at the 1 deviation Bollinger Band. We have here, you see a ranging market. Yes, this is a a minor downtrend, minor uptrend, minor downtrend, yes, and that is a clear ranging market. For those who knows my concepts which I have explained in the ebook, they will understand also at the EMAs that we have here a ranging market, because you see this what I call the DNA crossing, when EMAs are crossing themselves over and over again and price is ranging around it. Yes, you see, and the Bollinger Band are flat. You see here flat, flat. Yes, and those flat Bollinger Bands here and here, yes, and here and here are showing resistance levels, support levels. Yes, this one here is a strong support level, the 1.1700, and here we have a resistance level, and here we have another one, yes, which are the based on the Bollinger Band. And obviously we have here also in between a strong support and resistance level, because price is ranging around it. Yes, that is what this kind of market condition is telling me. Yes, and that is what you should also see immediately. If you open the chart, you should understand the market condition only based on that what the Bollinger Band is telling you and also what the EMAs are telling you. So 1 second. So yes, let's see. So I will start the video, and as soon as there will come up some trade, I will explain in detail why I took this trade. So let's see what's going on here. So the trades are going on, yes. And let me see if I can, I'm preparing maybe, yes, I prepare. So I entered here into a put. I will put it a little bit back, yes, so you see the movement again. You see price move up, yes, and on the movement downwards, yes, I entered immediately into a put, yes, expecting that price would go down. And that is because this is what I have explained so often, yes. In this kind of ranging market, yes, where we have here a resistance and here a support level, yes, which can be seen nice how the price is reacting on it, yes. That are those edges, yes, in ranging market where you have to trade. You have to trade the touch of the Bollinger Band as a reversal, yes, and here also, yes, and if you are above or below all EMAs, that means here, yes, and you see here we are below all EMAs. Here's the 100, here's the 20, and here is the 50, and this candle broke all of them and closed below this. Then after this, the trend is down because we got here the pullback. Yes, so you know already the direction of the trend is downwards. Then this candle broke all EMAs, and after this candle broke all EMAs, we got also a rejection, yes, and this candlestick is a bearish candlestick, yes, a big belt, yes, which is also a continuation pattern, yes. So you have all four rules confirmed, yes. You have the trend, the key level, which broke all EMAs, yes, that is a key level. Then the candlestick pattern, which is a bearish candlestick, and then the rejection, yes, and that was the reason why I entered here into this put trade, yes, because I was sure that price will continue to going down, because to go up, it should break through all EMAs again, yes. And why should the candlestick before break through all of them if it has done this already now, yes? And because it's ranging market, I was expecting this kind of movement here, yes. That was the reason. So let's see what's happened here. Another 10 seconds, and yeah, it's important is that this candle was a bearish, strong bearish candle, broke all EMAs, got was in a downtrend already before, yes, of this pullback of the one deviation, yes, and yes, and then the rejection from the 20 and the 50 EMA, which confirmed the trade. So then there was a gap down, yes, and that was already a runaway gap. That was already the position to enter into a trade, yes. I would have entered immediately after this gap down, yes, but I was maybe something explaining. So, and then I entered here into a call. So let me see, let me show you this. So when does I enter into this call? I entered into this call, you see here the last 2 seconds of the purchase time, yes. That means I had to enter now, else I had to wait for the next candle to appear, yes, because that were the last seconds to enter into a trade. And that was the reason why I entered immediately into this trade, yes. Because I understood if not, I would lose this or would miss this opportunity. And because I saw, you see, I'm explaining this, because I saw this kind of area. Let me show you this. Wait, I have to stop the video first. So, yes, here, because I saw this kind of area here, due to this wicks here, yes, here, this wicks, I understood that price will close at least at this level or above this level, because we are still into a ranging market here, yes. And so I was expecting that this resistance level here would hold, yes. And because we got here already 2 wicks and that showed me a strong support level, I entered on the last second of the purchase time into this call trade. Yes, that is what I have seen, what I have explained maybe also in this video. Yes, and in the last seconds, yes, you see how price is retracing back. Yes, and yes, and then it was a draw. Yes, because of yes, I don't know why, but then I understood immediately that price will go up, because this wick here, yes, showed me, first of all, this candle closed exactly on the draw, on the level where I entered before. Then this wick is showing buying pressure, because it's also bigger than the upper wick, which shows selling pressure, yes. And because we have this key level here, yes, because this candle respected this key level, and we have still ranging market, yes, that is what the EMAs are telling. I was pretty much sure that price would go up further, and that's the reason why I entered immediately, because I was expecting already the previous candle that this will close above this entry point. So let's see. It looks like a breakout, yes. That is what a lot of traders will, where they will be tricked, because they would think, okay, we have a breakout now, yes, but you have to understand support and resistance level, and I can only recommend to anybody to watch my support and resistance videos, yes, live trading videos, where I have explained the change of polarity and how this kind of support and resistance levels are acting on ranging market and trending market. That's because this one here would have been a pure put, yes, in a trending market. But in this kind of ranging market, yes, it was a call. And that is the difference between the market conditions, how to trade such kind of candles. So, and because we have here this kind of ranging market, we got this kind of consolidation area here. You see also here consolidation at key levels, consolidation, yes. Always consolidation. Also here, you see not a direct reversal. You see here this kind of candle, which is a form of consolidation, because you see it's gone down, it goes up, it's gone down, and that is nothing else than consolidation. It's the same like this. It's gone up, it's gone down, it's gotten up, and then we're going down. Yes, that is consolidation at key levels here, yes. And so that was, in my opinion, then also a consolidation, because you see also how this candle here moved, yes. And then, because that's what I was telling you before, then it looked like a breakout, yes, and the breakout should came up, yes, and that was the reason why I understood. And I was waiting. You see, I have the mouse already on the lower button, yes, because I was waiting for a better entry point, and the better entry point is at least above the wick of the previous candle. Yes, that is the, you see, 2 seconds before the purchase time expired, I entered into this because the price didn't retrace back. If you have seen my other candlestick pattern videos, live trading videos, you see I'm waiting for some kind of movement in the direction which I'm expecting, yes, due to the trend, to the key level, to the candlestick pattern, yes, and then I will try almost to wait for the last few seconds of the expiration time, yes, the purchase time, to enter into a trade, and then I validate if the entry point is good or not, yes. And here it was a good entry point because it was a little bit higher than the previous wicks, yes, because I know if price is going to go is in a downtrend, for example, and be like this, yes, it will mostly break this area here, this wick area, and so I had this kind of margin of safety. If you check a lot of doji candles, yes, a dragonfly doji and gravestone dojis, you will see if the trend is in the direction of the wick of the doji, you can mostly expect that the price will break through this area, yes. That means it will break, let me show you this, it will mostly break through here, like this one here, for example, it breaks through this wick here, yes, this wick, yes, and or if you see this one, it will break through this wick here, yes, you see, that is what I'm trying to explain here. This is also like a doji, so price would break through this wick here, yes, and that is what you will understand if you trade a lot of dragonfly doji and gravestone doji. You will understand that this would be then here it would be a nice entry point below this level, yes, below this level. Here it was a nice entry point above this level because the trend was down, here below this level because the trend was up, and here because we have here a reversal, it would be nice also an entry point below this level, yes, that means here somewhere, so you would have this margin of safety, at least maybe the 50%, yes, because often if there is a consolidation area, price will stay below the 50%, but the problem is because those kind of areas most often act as support and resistance, you don't get this kind of nice entry points like I have done, I've got then here, yes, that was only because I got this kind of wick here, that price got back to this. So that was already everything about those trades, yes. If you like this video, do a like. If you didn't subscribe to my channel, and if you have something to say, drop me a line in the comment section. So I would say stay safe and bye bye.